Hi, this is Sean Johnson from Centric Wealth Advisory. This is another video to go through a template that I've created to hopefully add some value to those that are wanting to learn more about exchange rates, but also working out future values or calculating how long money is going to last if you are taking a monthly drawdown from the investment. I'm going to do a quick share screen with you now to go through this template in detail. This template is available for download in the description of this video. Alternatively, you can go to the link on the YouTube channel, which has all the free templates. You're welcome to scroll through all the templates that are available and just download from there. But I do find that if you download the template and go through it with me, it would make a lot more sense from an understanding perspective. So you're probably wondering, what does this template do? There's a button here called refresh currencies. And the purpose of this button is it is a macro that has recorded step where I've effectively just gone to data and refresh all. Fortunately, a lot of people are not familiar with Excel, which means that they wouldn't know where to refresh the data. And the reason why this is important is because exchange rates change minute by minute. In other words, there are sites that you can go to and you can see how the exchange rates will change because obviously it fluctuates all the time. The exchange rates that we're currently tracking at the moment is US dollars, euros, UK pound sterling, Australian dollar, Canadian dollar, the Japanese yen, and of course, obviously the rand because it's the currency ratio is 1 to 1. What you would first do is you would refresh the currencies. And what it will then do is it will perform the macro of pulling information from the external site, and it will update these currencies for you. Obviously, if you just want to use this for educational purposes, then you don't have to refresh all the time, but it does help knowing whether the dollar has strengthened or weakened against the rand, and of course, obviously the other currencies. Not that long ago, it was 19 Rand to a US dollar. It is now 18.41. And that's quite important because if you're investing in the US, the Rand strengthens, your Rand is appreciating against the US dollar, and of course, obviously vice versa. And the reason why people would recommend investing offshore is because we're expecting the Rand to depreciate over time, where you get to, let's say, 20 Rand to a US dollar. In the past, I have seen 24 Rand to a UK pound sterling. It is still hovering around 23.45%. At one stage, it was a lot lower for a pound. It was about 18, 19 Rand. The Rand had strengthened, but also there was issues with the UK. I think this was during Brexit. The UK pound did drop quite substantially. But the point being is that you're going to do an exchange rate calculation. So now what you do is you put the ZAR value in over here, and then you can actually go to your drop down, and let's say you take US dollar. What it does, takes the million Rand, divides it by the US dollar, which is 1841. And then you would know, okay, well, if I've got a million Rand and I convert that into US dollars, what is the actual amount? It's 54,328. If you would do the same thing for UK pound, it's less. Why? Because it's 23 Rand to a pound, 1841 to a US dollar. So you can see you get a lot less, which is not ideal if you are saving locally in South Africa and you're wanting to move to the UK or purchase in the UK. Your Rand is depreciated quite substantially when you convert it. On the converse, if you're investing offshore in pounds or in US dollars, and the Rand depreciates and there's growth on that end, you benefit from the appreciation of the offshore currency and the growth in the funds that you've invested offshore. That's why a lot of people recommend investing or diversifying your portfolio to have an offshore component. So you can either invest directly offshore, in other words, your money physically leaves South Africa, or you can invest through what they call feeder funds, which is basically a rand-denominated investment, but it's invested through offshore funds where the money is essentially put into investments abroad. It could be companies abroad like Apple, Microsoft, Nvidia, but your reporting is done in rands. Whereas if you invest directly offshore, the money physically leaves the country, your reporting would be in that currency. And the most common ones would be US dollar and British pound sterling. Now, two things I want to show you. I've just put it in ongoing fees of 1.5%, and I put in an average tax rate of 18%. This is really just for educational purposes. When you're really getting to larger numbers, I'm going to show you what happens if you make a larger number. But because I'm working on R1 million, whatever you draw down for a million, that it doesn't deplete very quickly, I'm going to work on 18%. So let's just put it onto, let's put it onto US dollar. So now you've got $54,000. Let's say now you've got R1 million and I invest directly offshore into a fund. And I now convert that into, I purchase it when the rand is quite strong, 1841. And I go into an offshore investment and I get 54,328 as the starting value. If I get growth of 10%, then we can say 10% being the target return, that could be the growth abroad plus potentially depreciation of the rand. Let's just work on 10%. That 54,228 will grow to 865, and then you will continue that process. So let's say you invest for 10 years, that 54,328 will grow to 111,811. And if you were to work out that in rands, you take that amount, just multiply it by the 18.41. Obviously, in 10 years, the rand will probably have depreciated further, so you'll get even better returns. Let's say it was 20 rand to a US dollar, then you're going to be timesing that by 20. And that's when the numbers start really making sense by investing offshore, because there's two elements. There's the growth offshore in the funds that you're in, and secondly, it's the appreciation of the exchange rates. Of course, on the converse of that, if the rand strengthened and say it dropped to 17 rand to a dollar, then this 111,800 would be converted into rands, would be lower in rand terms. As I've already said, 54,228 times by the exchange rate will get you 2 million. And if this was now, let's say, 20 rand, then you'll take this times 20. It's obviously be higher than 1 million. But the reason why I'm working in rands into offshore, because I want to illustrate to you what happens when you're converting from rands, because we are obviously in South Africa, and we convert it into an offshore currency. What you can also do further to this is, let's say you invest and you convert it into US dollars, and now you want to, let's say, take $1,000 from, okay, it's actually not, yeah, sorry, $250, which doesn't seem like a lot. $250 times by the exchange rate, so it gives you a concept in rands. But let's say you take $250, which is $3,000 for the year. That's an annual drawdown in dollar terms of 5.5%. And as time goes by, because you are getting your 10% compounding, thankfully your money is growing, because you're drawing down relative to the return higher, which means that obviously if you're growing at 10% and you're drawing down 5.5, you're growing your money. Very simple. And this is to illustrate to you, obviously, if you invest in offshore and you start drawing income abroad, this is how it would look. I have factored in tax. I'm just working on 18%. There are different tax rates in the US, but for argument's sake, let's just work on 18%. And $250 before tax, $205 after tax. That's obviously what the investor would get when you factor in tax, and this is the fees. So you're taking $540 from the 3,000 because it's 1.5%. Obviously, it could be much lower depending on investment structuring, whatever your advisory fees, etc. But the reason for this is just to show you the impact. Of course, obviously, if I don't go and change this into pounds, then your drawdown would be completely different. It's 7%. So if this was now a British pound sterling investment and you took £250 per month, that's your drawdown. Is it still growing? It's going from 42, 43, 44, 45. Yes, it is. So we can see, obviously, because it's 10% growth, 7% escalation, you are growing your capital. However, let's say we're going to factor in escalations of 4%. And the reason why I'm saying 4%, because if in the USA, inflation is lower in the US than it is in South Africa, and if it was an offshore investment, of course, obviously, when you bring it back to South Africa and you're living in South Africa and you're living off that income, you're looking at the buying power in rand terms. So inflation probably be high, but let's just work on 4%. And we now say, well, 3,000 for the year, that's going to escalate at 4%, continue escalating. Will my capital still grow? Yes, it will. However, it will get to a stage, and this is where the graph comes in, does it for you, is we can actually see how the escalations per year from the drawdowns results in the fund starting to actually deplete. You can see the fund value balance starting to go down. And it's because you're consistently escalating relative to the return. The return's the same. So obviously, if your return was increasing in line with the escalations, you would never run out of money. But unfortunately, your investment return depends on the asset classes that you're in. Obviously, if you invest in offshore, it's highly volatile because of exchange rates, etc. But the point is that we can see here, there's a calculation running. Okay, it does say 30 years because the reporting period is 30 years. In reality, of course, obviously, as time goes by, that will go to naught. So if I were to just increase this amount to say 350, the graph would then calculate that it'll take 17 years to deplete the funds in US dollars. And if I were to change this into British pounds sterling, it would be 12 years. So you can see now one of two things. If I had R1 million, where do I invest my money? And if I'll draw in an income in offshore terms, how long would the money last? Obviously, now just bearing in mind that if you draw in pounds, you convert that into rands, it's 23 Rand 45, you bring it back, and in US dollars, 1841. But the point I'm getting at is you can just see here, if you were a British person and if you took R1 million and you convert it into pounds, you start drawing that from the UK, your money would last 12 years. Of course, if it's in dollars, a bit longer. And of course, if you were in Japan, it would actually never run out because it's 8 Rand 53 to the yen. And that's just to give you a very basic overview of why investing abroad is so important, because you are looking at different exchange rates, and you can invest your money in South Africa locally and not have any offshore exposure. But as soon as you convert it into an offshore currency, as we have shown you, that drops quite dramatically to the converted rate in a foreign country. And the most important thing that people just need to understand is that when you're drawing an income from an investment, this is a voluntary investment. There's no restrictions in annual drawdown. We have separate templates which we'll get to for retirement planning purposes, where you're restricted between 2.5% and 17.5% drawdown. I will go through that. We have a lot of comprehensive templates that we're going to go through. This is the template that I just really want to show you. And I will probably make more complex templates where we can convert whatever currency, so it says US dollar, we can convert that into pounds. Obviously, you're taking the US dollar and you're dividing that by the pound. There will be a different variance because the US dollar versus pound will vary from a rand to a US dollar, for example. In other words, if you had $1 million and you converted that into pounds, it wouldn't drop dramatically because of the exchange rates being very similar. It's 1841 to 2345, and even closer for euro and US dollar, 1841, 1996, just under 20 Rand. But the point I'm making is that people need to start understanding the reason why offshore makes sense. Because yes, R1 million looks great in South Africa, but in the US, 54,328. This would probably be get you a lot less in terms of purchasing power. Obviously relative. If you were to look at what would get you for R1 million in South Africa, you could purchase a property in South Africa for R1 million. You can get a 2-bed, 1-bathroom apartment, obviously depending on which area, for R1 million cash. Would you be able to find the same apartment equivalent in the US for $54,328? If the answer is no, you'd say that property is $300,000. You've got to take $300,000 and times it by 1841. Then you start to realize for the same thing, you've got to put a lot more rand in, and that's where the exchange rates are quite important to understand. If you invest in offshore and you can brought it back later when, let's say, the rand was very weak, then you would then convert that into rands and have a lot more money to spend rand terms to buy assets in this country, in South Africa. Let's just do a refresh and see if there's any changes. 1841. I don't think so. 1842, change the cent. Just note that for this template to operate, there is a macro, so you need to enable macros when you open up this template to perform the update. And secondly, we are using a full stop for the percent, when there was 1 full stop 50, and we're using a comma for the actual lump sum value. The reason why I'm just mentioning this is because some people have settings where this is the other way around, where you have 1,50 and then you have 1 million. You can still reflect it with a comma here, but the reality is that the setting shows that this is a comma and not a full stop. And the reason why I'm telling you this is because when we pull in the data from the external website, we are using it presented in a full stop. It's 18 full stop 42 and not 18 comma. And the reason why I just mentioned this is because when you're converting that into here, this might have a different value. It might not pull through correctly because of the settings. If it does occur, just put a comment in the video. I will see if I can assist. But I do have another template where it does not do the currency conversion. All it will do is it will convert it from a rand currency into US dollar. It does not perform an exchange rate calculation because there is a lot more complexity around Excel settings, but it does exactly the same thing as this. Only difference is you put the rand amount, you click a macro to change it to US dollars. It doesn't do the exchange rate, it just shows you reporting in different currencies. But nevertheless, if it does work on your computer, then you're welcome to go through this and just play around, watch this video and do the example with me. There's an explanation over here. So based on 54,301 invested with an initial income of 350, just bear in mind, it's dollars, with which escalated at 4% a year. The capital invested or depleted in 17 years, the growth rate is 10% compounded. Now, going back to 250, if the money, if invested for 54,301 invested for initial period of $250, which escalated 4%, last 30 years, and let's say you put in $100. So I've said here, based on $54,301 invested with initial income of $100, escalating 4%, it'll never deplete. And the reason for this is a separate formula where it calculates if the answer is 0, which means that this will never run out. You will continue growing this investment indefinitely if you're drawing $100 escalating at 4%. Why? Because obviously the return versus what you're drawing is a lot greater. So there are quite a few formulas built in here. Of course, lastly, just disclaimer, this template has been created for educational personal use and should not be seen as a financial advice. Any recommendation should be consulted with a financial planning professional before taking any actions. In other words, if you're looking to invest offshore, you need to understand implications for tax, for exchange control, risks, of course, obviously, because your money is now leaving the country. But more importantly, where does it fit into your investment? You don't want to be investing offshore if you're going to be needing the money 6 months from now. It doesn't make sense. You want to invest offshore as long as possible to benefit from the appreciation of rand long term, and of course, obviously, growth abroad, so that you can build your wealth through foreign currency. Thank you for taking the time to watch this video. I do hope there's been some value passed on, even if you just watch this video just to see how it works without using the template. I do hope that this has given you a bit more insight into why offshore investing is quite important. Stay tuned for future videos. I will go through the templates with the macro running to change from rand and dollar. I think I'll do that next. So if this template doesn't work, you can at least use that one, because there is no link to an external site that pulls through the exchange rates. It's just purely a button that allows you to convert between rand and dollars, because dollars is the most common reporting currency for investors. Thanks for now, and hope to educate you further in the next video. Thanks. Ciao.